Hey, welcome everybody to another Tuesday Live with Jen and Joe.
Hi, guys.
We are your hosts, bringing some awesome stuff to your life about real estate on a Tuesday, right? So, obviously, if you're just checking for the first time, thank you for coming. Make sure you could also listen to this on our YouTube channel, Creative Finance Playbook, and same thing on all of the podcasts. So, if you want to tune into the podcast, listen to these on there too, or just come here Tuesday live on our Zoom and our Facebook group on Creative Finance Playbook with Jen and Joe. So today, and we should start doing this more often, is we get a ton of great questions in our Facebook group. And every single week, I always say, hey guys, like what questions do you have? Well, today we're going to get to answering them. Obviously, if you guys have any questions too, please drop them down in the comments and we'll make sure we get to those. We got some deals going. I will say it has been an exciting time to be in real estate and in creative finance in particular. Many of you know our story. Jen and I were buying one house every single year. We were buying these fixer-uppers that were junk that needed a whole lot of work. We would redo the whole thing, rent it out, refinance it. Well, the story goes 2016, I was talking to my friend who was the manager at the bank at Canandaigua National Bank, which was the small local bank we were using to refinance these properties. And he says, Joe, at 10 properties, the bank will cut you off. So you need to figure something else out. So in 2016 is when I stumbled on YouTube, Ron LeGrand's whole thing about how to buy houses without using banks. And this is where we fell in love. And the first thing we did is we hired one of his coaches. And that's what really helped us do our first deal within a few months, which was $100 down with a 0% mortgage. And after we did that deal, Jen and I, we fell in love with creative finance. And
there was no going back.
There was no more going back. And there was really, I mean, we still do get those fixer-uppers from time to time. We got a couple of those we're working on right now. But most of the houses that we like to buy are pretty houses in pretty neighborhoods. So a couple of things that we got going on right now is a deal up in Rochester, New York that we're going to be closing on in hopefully about 2 weeks-ish. This one was actually on the market, guys, listed with a realtor too. So we went over this a few weeks ago, how to talk to realtors, how to make it super easy and fun for them to get paid. And I will tell you, in our situation, we're helping out a seller, we're helping out a realtor get paid a commission, and we get a turnkey house with a 2.8 interest rate and a super low payment. So we love these deals. And as this market continues to change, interest rates are going up, the market's cooling off in a lot of places. You're going to find more and more of these deals out there. You're going to find more of these people who, if they just bought a house last year, even a new build or 2 years ago, and they want to sell it, it's getting tough right now. The one market I see still pretty strong is the median house range and under. That's usually one of the last to get affected at all. So if the median house in your city is, say, 300,000, well, under that 300,000, that market is generally still pretty decent. A lot of times, if it's your first home or you're looking to downsize, there is a lot of people who will still buy those houses, even if rates are still kind of high. It's the more expensive stuff is where it's getting a little tricky right now. So some of these deals we find, like for an example, we just wrote up a handful in the last few days. One was in Cleveland, Ohio. Gentleman just bought it. Bless you, dear.
Oh, sorry.
Whoa, I'm gonna warn you guys, when she sneezes, it sounds like a car accident happened. So if any of you got scared,
Sorry.
okay.
Sorry for the listener.
But the deal in Cleveland was a turnkey house. The gentleman just bought it. And he's willing to sell it to us for what he owes, because he knows if he puts in the market, by the time he takes out commission and closing costs, he might have to write a check for thousands of dollars by the time we do the math. And he doesn't have that kind of money, can't afford the house already. So that one is turnkey. Payment we're taking over is a little over $1,100, and the house rents for $1,400, and it needs nothing. We're just going to pay a few thousand in closing costs. So we're finding more and more of these deals. We have another one we just did 2 days ago that's right outside of Cleveland. Same thing, cute little house. Doesn't need a thing, just bought recently. So this is where we're finding a lot of folks right now, of somebody that maybe we've chatted with a few months ago, and they said no then, and now they're coming out of the ether, guys. I think the market is starting to settle in a lot of these places, and they're saying, yes, we want to do business with you now. So if you've talked to anybody in the last 6 months to the last year and it didn't turn into a deal, call them, send them a message, because I will tell you what, as this market changes, you're going to find more and more of these. So we're going to go over some questions.
Yeah. So again, I just wanted to reiterate the group that we keep talking about. If you're listening to this later on, it's Facebook group, Creative Finance Playbook with Jenn and Joe. And we put in there every week, you can drop your questions. And then when we come live, we're going to answer these questions for you. So you can have them recorded and they'll be placed onto YouTube or podcasts wherever you listen to those. And then anyone here is going to drop in some questions as well. And we're going to answer as many as we possibly can. So we're going to get going here.
So yeah, when you come, you get your questions answered live.
Yeah.
Cool. Do you want to start going over some of the first questions?
Yeah.
We got a bunch in our group too, so you get to pick.
Oh, geez, pressure's on here.
You can drive.
Goodness gracious. Okay. Let's start with, you know what? I'm gonna pick somebody who's here. Let's start with Melanie. What all do you factor in when running the numbers on seller finance sub 2 outside PITI and assignment fee? So that is a great question.
Good question, Melanie. So the factors that I look at, first of all, is what's the condition of the house, right? Is it turnkey or does it need some work? Most of the ones that we find are turnkey or pretty close. They might need a little paint, something like that, but pretty close to being turnkey. So what do I factor in? Is how much do I need to put into the deal cash-wise in order to make that deal close? That could be a down payment.
To the seller?
Down payment to the seller, potentially. A lot of times we buy with no money down. So we like to factor in our cost of entry, is what we call that, as low as possible. I talked to somebody today that says, Joe, I have a great deal, but I'm going to need $90,000 to close on it. I said, well, geez, that's an awfully high cost of entry. And I know for me, I'm out on that deal. I wouldn't do it, me personally, but there's more to it because it was rent ready, paying full price, come up with 90,000. You get to rent it, you'll make some money. But for me, I'm not coming up with 90,000 to buy a property. There's no way. Many of these deals, like you hear about our Cleveland deal, we're going to own that property for about $3,000 to $4,000 total. And that's just covering the closing costs. That's the kind of deal I like. So if I had to come up with and dispel $90,000 for one deal, the way we buy houses, I could have bought 3 or 4 or 5. So cost of entry, number one thing I'd look at. How much money do I need to make that deal happen? Then number 2, what's my spread between the monthly payment, including all the fees and all that stuff, versus what I could rent it for, right? What's my spread? So for an example, I had one we have a small group that we work with of clients. And one question was in there yesterday was the payment with taxes and insurance and everything included was $1,330. And the area only rents for $1,300. I said, well, geez, you're going to lose $30 a month and you have to come up with $15,000 for your cost of entry to lose $30 a month. To me, I'm not doing that kind of deal, right? Unless you're going over a big appreciation, but you're paying all the money for the property in that situation, no dice for me. So the ones that I like are low entry fee. I can make some money on that rent every month and the house is turnkey or pretty darn close to it. Those are my favorites when I'm looking at a creative finance deal. And if somebody comes to me and says, Joe, you have a entry fee of $50,000, I better get a really huge discount or something better be going on for me to have to come up with that money. If not, I pass. And here's the next thing, guys, I will tell you, a deal that we're working on right now. Unfortunately, from the soon to be ex-wife, it sounds like it's not going to work, but we had a seller who's got a 5,000 square foot house in Georgia. It's 5,000 square foot house built in 06, is open to terms, wants close to 800,000 for it. But when we talked originally in May, he wanted $100,000 down. And we said, no deal. Well, he came back to us a few weeks ago because it wasn't selling and said, I'll do 50 grand down. Never mind, I'll do 25 grand down. And then he said, well, let's just get on the phone and make a deal. And he took 10 grand down, was the deal we settled on. So just because he said 100 grand down a few months ago, he's willing to do $10,000 down today.
And there's another one too we're talking to doing the same thing.
Yeah.
Yeah.
Well, unfortunately for him, he says, this sounds great. Just send over the information to my ex-wife. And the ex-wife says, beat it. I'm not going to do anything. I'll let this house go back to the bank before I help out my soon-to-be ex-husband, which is wild. But that's a different story.
Yeah, that's nothing we can do there.
So, but in all honesty, what I'm getting with that is if somebody wants a high number down right now, doesn't mean they won't change later on. So just follow up is key.
Yeah, absolutely. Awesome. All right. So another question, it's asked a couple different ways, but what do you use for agreements, the contracts, the documents? It's like, is there this crazy secret thing that you use?
Holy cow. I will tell you what, guys.
Seller finance and sub.
We need to put this question. I should like record this.
We should make a short on it.
And just put it to rest. Okay. So many folks say, Joe, I am just starting off. And the way I work is I need to know how to fill out an agreement first. And that's what's stopping me from making a deal. Most of the time, these are the same folks who haven't talked to a seller in months, if not years or ever. So my whole first thing is start talking to sellers first. The reason why we do deals is we have a system in place, right? You generate leads, you talk to leads, you filter out the good ones and bad ones. You structure the deals with the good ones. And then once they say yes, then you need that agreement. But so many people want that agreement first and you're kind of doing it backwards, right? But I get it. You want to know when they do say yes, what do I do? Super easy peasy, guys. This is going to make it so much easier. If you're going to do an area in Nashville, Tennessee, for an example, you could talk to any attorney, title company, or realtor in Nashville, Tennessee, and they will give you for free the county approved agreements in any county across the country, guys, for free. You don't need a special sub-2 agreement, creative finance agreement. Do I have an easy one that I like to use? Yes, I do. Have I used the county one in many places all of the time? Because in all of those, there's usually either inside the agreement or it's a separate addendum that is for seller financing. And all I do is I write on that in the original agreement, or if it's a separate addendum, just outline the terms that we agreed on. Guys, we're from New York, which is one of the most difficult places in the whole country to do business in anything you ever want to do. And I would just use the standard county agreement there, put in on the separate addendum, because it's not even written in the original agreement in New York. It's a separate addendum. And I would just fill out the 4 factors: the price, the monthly payment, the term length, the down payment. It's all right on there. Every county across the country is going to have this. So talk to a realtor, talk to an attorney or a title company, and where you're currently buying, and say, what is the county approved agreements to use? Because I'll tell you what happens, guys. If you're in a state like New York, and it's an attorney state, which a lot of people get stumped on, and everybody hates New York because it's so hard to do business. Well, this is where we learned. So anywhere else around the country, it's super easy. Even in New York, is we've cracked that code.
You can make it there. You can make it anywhere.
That's the true thing. But here's what we would do is we would use the standard county agreement, because you have to have the seller's attorney go on their side of the deal too. So if I'm sending the seller's attorney an agreement they've never seen before, now they have to stop what they're doing and they have to pick apart that whole agreement to cross every T and to dot every I. If I send them the standard agreement that they're used to seeing, that they see millions of these every single week, month, year that they do business, and they know the 4 to 5 spots to check, that's what they're going to do. It comes a lot easier. So instead of trying to find out some secret agreement, trying to partner with somebody to take somebody's agreement, guys, just use the standard county agreement. And all you're going to do on a standard purchase and sale agreement is write the seller's name, your buyer's name, the terms that you agreed on when you're closing. There's usually a comment section that I could write like as is or whatever. No inspection, 21 days till due diligence, whatever you want to write in the comment section, just have it okayed. And then once you send that to the seller and they've checked it off, and then you have too, they've okayed the paperwork, that's when you're going to send it to the title company or the attorney, and they're going to do the closing docs, not something you have to do. So don't worry about the paperwork. Just find out where you got a deal, reach out to an attorney in that area once you have it, and you're ready to go. Simple, easy peasy, guys. I know the first one I did, I wrinkled and crimpled
With
up
a
a few times.
caveat, if I might add, that you also had a mentor.
I
and a
did.
coach. So just keep that in mind too. So if you are getting down the trail and you need to make sure you either have somebody you're partnering with that knows what they're doing, or a coach that you can, entrust with, because sometimes there are things you just want to make sure your I's are dotted, your T's are crossed, and that you're doing everything correctly, because attention to detail does matter, especially with creative deals. So definitely keep that in mind as you're doing those.
100%.
And then I think the second most asked question has to be, what about the due on sale clause? How do I avoid it?
Okay. So many of you may know or may not know what the due on sale clause is. It's a clause written in all the mortgages that say it's an acceleration clause, as you'll also hear that called sometimes too. That just means that the bank has the right to call the loan due, which means they have a right within 30, 60, 90 days, whatever it is, to say, okay, we just want to cancel taking monthly payments. We want it all up front, one big chunk of money, right? They're going to say, I want you owe us 312 as your balance. We want that full 312. So what triggers that? It can trigger you selling the property, right? So does the bank hold the right to call the loan due? They do. Will they call it due? Like my coach would say, is probably not, but unless it's you, then they probably will, right? He's a jokester. So either
Or
way,
he'll say they could.
right. But there are ways to prevent that from happening, or to definitely save yourself a lot of aggravation. Number one, we like to take deed into a land trust. It's for privacy reasons. It is not against the law to put your property into a trust, even if it's your personal residence, which I highly recommend you do. Talk to a lawyer, accountant about that, but we recommend doing that. But number one, you could deed the property into a land trust, which we always do. Now, that doesn't solve every problem, but it solves a lot of them. Number two is setting up the insurance the right way. And if you haven't already listened to our podcast, we did this a few months ago with James Jenkins, who is a agent who does business in probably about 35 states. He's done a couple thousand of these creative finance deals that his company's insured. And we did an interview with him to kind of go over what's the proper way to set that up. If you already haven't listened to that, please do. James Jenkins is his name. Awesome guy. But set up the insurance the right way and make the payments on time. It really boils down to those two things. If you set up the insurance the correct way by having the seller on there as additionally named insured, make sure the payments are done on time. And if you do that, you're going to stay off someone's desk. And most likely that bank is going to just keep taking the payments. If it is a small community bank or credit union, and maybe they do have somebody who overlooks this stuff, can they call the loan due? Sure, they can. And there's definitely ways to get around that. I've heard in Phoenix, for example, Arizona, that after you've owned the property and you bought it this way, I don't know how many payments it was. I just heard somebody talk about this, that legally the bank can't even go after it anymore. Scott Horn was just talking about that. There's different clauses in every state. Every state's going to be a little bit different, but banks are in the business of lending money, not taking properties or owning real estate. And I know a lot of people say, well, the rate's going up so high, why wouldn't they call the loan due on a 2.9 rate, knowing that they could reinvest that money? That money's already spent on that property. That's not what they're looking to do. And if it's that big of a concern, you could also buy it on a contract for deed. If it's truly a concern, which means the property is sold, but that deed sits in an escrow third-party account, so it never transfers over to you until you pay that seller off completely. So don't let that due on sale clause stop you from doing this business.
Do you add the seller to your land trust temporarily?
No. So, okay, we don't, but I've seen somebody add the seller to the land trust as the beneficiary, with also the rights to assign that beneficiary interest over to the new buyer. So then the bank would even see that copy of the original land trust and see that seller on there, and then they could do zilch about that. But then they also have the assignment where they're assigning that over to the buyer too. So you can do that. An extra step, but yes.
Yeah. All right, we'll go back up to the live folks up here. Gabe is asking, do you have a home inspection to identify if there might be any major issues before closing a seller finance or sub-2 deal?
You could send like a contractor through. if you really want to spend the $500-600, $700, you can send over a home inspection. To be honest with you, with us, we never do. If I'm buying a beautiful house in a beautiful neighborhood and it's costing me $3-4 grand out of pocket, most likely I don't even do that. A lot of times I've seen, the pictures from Zillow because the seller just bought it a year and a half ago and the house looks the same from the current pictures they send us. But you probably should at least send a contractor there to do a walkthrough and have them take a look at the utilities and electric and things like that. It's probably not a terrible idea.
Thomasina is asking, do you get the title at close for a seller finance deal?
Hi, Thomasina. Thanks for joining us. Yes, you do. You do get the title to the company or to the property at closing on a seller finance deal. So from day one, you are now the new owner. You will hold that title, hopefully in a land trust. And your LLC will be the beneficiary of that. But yes, you do receive that at closing. So good question.
All righty. I'm going to go back to a previous one here. What happens when you get the response, I don't know why my mortgage balance would matter? It's not assumable and no banks allow that. So this must be when you're talking to a seller and you're starting to ask important questions. A seller responds with, I don't know why my mortgage balance would matter.
Yeah, great question. So here's the thing, guys. We have our opening script, the 10 questions that we ask sellers. It's right on our website, creativefinanceplaybook.com. If you want to download that copy for free, it's right on there. So when we ask a seller questions, it's really in what you say and how you say it. And I think that's really important. I'll give you an example. If the first question I ask you is, hey, Casey, I'm interested in buying your house. How much do you owe on the mortgage? Like want to fight, fist go up, and they're not going to want to tell you any of that kind of stuff, right? Because that's a kind of abrupt question right in the beginning. So what we've done is now with our script, we've asked a lot of questions prior to that question, but we do get into that. And I would say it's over 90% of the time, people will answer our mortgage question. So what happens when we get that response is our virtual assistant, Michelle, who's in the Philippines, just simply and copy and pastes a rebuttal to that response. She doesn't think about it. She doesn't have to second guess. She just copy and paste and hits send and then just goes right on. That rebuttal just says there's many ways that we could buy a property and we're trying to come up with a few offers for you. So do you have a rough idea? And I will tell you, if they don't want to tell you, they're probably not highly motivated. And where our job is to separate with our opening script. Because see, guys, when I first got started, if I got 10 leads in one day, I had to call all 10 leads, and that's 20 minutes, a half hour phone call. That meant I'm on the phone for 4 to 5 hours that day, listening about the neighbor, all the stuff, right? So the reason why I love our system, the way we do it, is people reach out to us with their property they want to sell. We could text them the 10 questions and get the answers back, and now only get on the phone call with motivated people who are actually really nice and happy and want to do business. So if I get 10 leads, I might only get on the call with 2 of them. The other 10 kind of weed themselves out. And if you don't want to tell me what you owe on your property, many times that's going to be some of the ones I'll weed out depending on some of their first questions, like, why are you selling? And if they're like, I just want to sell it, I just want to see what your price is, right? And if you're that and then won't tell me your mortgage balance, I'm going to pull a Michael Jackson and tell you to beat it. Nicely, though.
Say you don't actually say that. People take you literally.
No, I don't. I say it nicely. I might ask a couple more questions and then just kind of either dissolve the conversation. And if I could get them to answer every question, I try. But most likely, from what I've noticed, those do not turn into deals.
Okay, I'm going to go back a little bit here.
I mean nicely when I say
no, I know, but that people listening are like hanging on your every word. So I got to be mindful of how you're
correct
sharing. You don't actually, you actually start singing the song. Guys, help us. No. Okay, here we go. Pros and cons of using buyer's agent when trying to pitch creative financing. And I know you did a whole episode on how to talk to agents.
All right. So if you want to use a buyer's agent, you can. That's a lot of stuff on the buyer's agent. You got one if they're young, they're hungry, they're ambitious, they want to make those calls, fine. But they got to see something in it for them too. What I've noticed for me personally is I would rather just work directly. This is me personally, guys. You do whatever's good for you. I'd like to work directly with the seller's realtor, because if we could come in an agreement, that's only one person I have to pay there a commission to. If I'm bringing in a buyer's agent, now I have to pay two people. And that could sometimes raise my cost of entry into the deal if I have to pay all these people like commissions and things like that. Now I'm doing a deal that was listed on the MLS. I have to pay one realtor and I'm paying her the full commission, the 6%. Not a terribly expensive property, a $200,000 property. She's going to get a $12,000 check. She'll split that with her brokerage. She'll do okay. But the part of the benefit is of doing business with me is, hey, listen, I could pay your commission. I'll cover the closing costs if I'm able to get over that 2.8 rate. So for me, a lot of times what I'll do is if I find a seller that has a property listed with an agent, I'll text that agent. Hi, my name is Joe. My wife is Jen. We came across one of your properties. One of your listings on Zillow is 248 Cranston Road still available, or did you sell it already? And if they say yes, it's still available. And then, sometimes I've noticed the seller just bought it. So many times I'll say, hey, I noticed they just bought it recently. Is everything okay with the property? And they'll tell me the story of why it's being sold. And if it sounds like there's some motivation going on and the says it's still available, I'm going to try to get on that phone call at that point.
Okay, back to the live, folks. Kenneth Michael Shires here. Hi, you guys are great. Just saying. Thanks, Kenneth.
Thank you.
As I prospect for combination low inch vacant turnkey, maybe pre-foreclosure, if I run into one that meets my criteria but has fallen into the court system, is that a red flag worth moving forward on?
So if it is a property that is like a vacant turnkey, maybe a pre-foreclosures, I just got to be a little bit mindful about, because once again, that seller is usually months behind on their mortgage payment. So if you got a $2,500 mortgage payment, like some of these folks down in Florida do, and they're a year behind, that's $30,000, right? Which means you would need $30,000 just to cure the back payments, cover closing costs. Once again, now my cost of entry gets to be really high. I'm not saying those people wouldn't love to be helped. Many of them would like to be helped. But in a lot of these situations, I've seen some of these in pre-foreclosure, they're 60, 70,000 behind on payments. And that's a lot of money to come up with to get them current. Plus, if they need a down payment or things like that, it gets to be tricky. If it's got back into the courts as far as like a vacant property, I would try to call the town or the courts to see if there's anything you could do there.
So
Great
where
question.
are your children studying, in which grade? I have
one question I see here that I wanted to get to as well. What marketing tactics are you using? And what would be the adequate monthly marketing budget? Great question, Lawrence. We shared right with everybody the number one way to get leads that we love is through Facebook. And I don't know of any other way to generate leads for free just by using a cell phone. Not even driving for dollars, because you still have to pay for gas in a car unless you're going to bike for dollars, and then you still got to bike, right? Got to eat a little something before you go on your bike ride. You might be out for a while. But with a phone, I guess that costs a little bit of money in an internet connection, but you could go into Facebook groups. Some of these groups I'm a part of have 100,000 people or more. Some only have 20, 30,000 people, but some of these have been just a huge resource that when I put out our ad, which when I say ad, I just joined a Facebook group that's a local buy and sell group. And when I go to put a post inside of that group, if it's a for sale, like a garage sale group, I where it says like, what do you want to sell? There's a spot for discussion. So I could click that. And then I just write our ad, which is, does anybody have a house for sale that's not market ready? I'm looking to buy one in the next 2 to 3 weeks. Just that simple. Sometimes I might change it up and say, my wife and I are looking to buy one in the next 2 to 3 weeks. Right. But don't do that in like 20 groups at once, or else Facebook will put you in Facebook jail for a couple of days. But if you do that into 5, 6 groups a day that have 20, 40, 50,000 people in them, you're going to generate off market leads. And the reason why we love this way is because I could target anywhere in the country for free. If I do PPC or any mail or anything like that, do you know how much it costs to target a big major city like Miami or LA or New York City or Dallas or Austin, it costs a lot inside of those city limits. But I could join Austin, Texas Facebook groups for free that have 50, 60,000 people in them. And there's a ton of them there. And then just put that ad into these Facebook groups for free. And I could generate off-market leads today in Austin. So it doesn't cost any money. And what I always recommend is our coaches told us revenue in first position, which means, guys, is before you spend money, you should make a bunch of money first. Generate free leads, make some deals. And then if you've got some extra money, then you can spend.
And we have a small group client one of our clients who found their personal home this way, guys. They are part of a group that they know their family lives in, they love the area. And lo and behold, they put that little ad out there, and within just a few days, they received a lead. So you just never know. And when you're open and you're positive and you're out there looking, you will find it. It's being persistent and patient at times. Sometimes it doesn't happen that quickly. But I just want to throw that out there. It's such a positive moment for that couple because this is the exact area that they've been wanting to live in. So had to share that. And, with that as well, remember that I see someone said that they just got thrown into what we call Facebook jail. So you have to be careful. You have to post on Facebook, guys. You have to be social because it is social media. So friend your neighbors, friend your high school classmates. Even if you're not best friends with them, that's okay. But being that generous person and sharing a little bit about your life, like what is it that you enjoy doing? What did you go out and did you go to the beach? Did you have a nice burger at this awesome little restaurant? Like share that kind of stuff, a little bit at a time and grow your network because it will pay off immensely. People are watching and they want to be helped. They want to be entertained. So give them some stuff to look at. And the more you post and you comment on other people's stuff, like the less likely you'll get into Facebook jail.
Well, you even have the Facebook jail ornament. Right?
Yeah, we had to do that a little bit there. So,
but yeah, don't spam it into like 10, 20, 30 groups. If you do 5, 6, 7 a day, you should be just fine.
Yep. We have a Tom here, newbie to creative financing and to our podcast. Well, welcome a fellow Rochester escapee.
Wow.
Question. What advice would you give to a beginner when speaking with a for sale by owner or FSBO in terms of negotiating? I see a lot of sellers asking for really high down payments.
Well, first of all, Tom, you're a very smart man. If you got out of Rochester, super cold up there. Great city, but cold. So the thing is, when I am talking with a seller for sale by owner, and we're talking about terms, the 4 things I try to narrow down when I'm having the conversation are the 4 legs to the chair, which are the 4 pillars to making a creative finance deal, which is how much of a down payment, what's the monthly payment, what's my term length, and what's the price of the house. I'm trying to figure out those 4 things. So the one line, if you guys don't listen to anything else I say ever again, that's cool. But use this one line when you're talking with sellers, and this will change everything, because this is the one line that I learned from one of our coaches that really changed us, is when I'm talking with the seller and I say, well, if I were to pay your price for your house, I typically buy with no money down, okay? That's all it is.
He allows that awkward silence for as long as necessary. That's like a little... And
I'm just quiet about it. And then if they say, well, I need a down payment, or, oh, no, I need money down, or, hey, I need money for something, I need 50 grand down. Or they say, usually sometimes they'll say, I need a down payment.
Yeah.
Well, that's when I let them know, well, because I typically buy with no money down, how close to 0 can you get to make this deal happen? And then I'm just quiet once again, right? How close to 0 can you get to make this deal work? Because I've already what's called anchoring. Does anybody know what anchoring is with sales, right? Anchoring means as I'm putting out that first number. Well, my first number is I typically buy with no money down. I've anchored it with 0 down. So therefore, instead of saying, well, how much money do you need? And they hit me with some crazy high number. If I tell them I typically buy with no money down, if they do need a down payment, they're going to bring it down automatically in their head. But that doesn't mean that's the yes or no to doing the deal. Once again, I see a lot of sellers who I think I mentioned earlier want a lot of money down. And then sometimes I just ask them, are you going on like a really nice trip, or did you have something planned with this money? Because if you guys are going on a nice trip, I'd make a great chaperone. I kind of joke around about it. And from them giggling from that, they'll say, no, I needed to pay off a credit card, or I need to pay off this, or I need to do that. Right. We're just trying to figure out. And here's the difference, guys. There's a difference between want and need. We need to figure out what do they need for the down payment, not how much they want. Those are two different things. So great question there. How am I researching markets? What websites or services do you use? That's a great question too, Paul. As far as like when I'm researching a market, I always tell everybody to just start where you are. You're going to know the neighborhood usually pretty well, the neighborhoods, plural, a little bit around, or maybe if there's a certain city that you like. I will say that a lot of folks like landlord friendly states if you're going to be turning a property into a rental. So you want to keep that into consideration too. Also depends on, are you looking for more cash flowing properties, or are you trying to do the appreciation thing, right? Because some people don't care about cash flow because in certain places it's very hard to cash flow, but they're waiting on appreciation, right? The property go up in value. For me, I'm a big cash flow person. If it don't make dollars, it don't make sense for me. Okay. And I know that I could write off and things like that, but I want to make sure I'm getting some money out of this property. So for me, I love cash flowing properties. And to be quite honest with you, some of our favorite properties are some of these small little $100,000, $200,000 houses that we bought with little to no cash out of pocket. Somebody gave us 15, 20 grand to move in, and they just cash flow $400, $500, $600 a month, and they're quiet, they're turnkey. I don't ever hear anything from them, and they just continually pay rent. Those are some of my absolute favorite deals. So when I'm researching a market, I market where I know, and then if I'm looking for appreciation, some of the Midwest is great. I'm sorry, not mid. If I'm looking for cash flow, the Midwest is great. If I'm looking for places like appreciation, obviously some of the major metro cities have that potential. But right now that's a trick, because if the market starts pulling back, people who are only banking on appreciation are going to have to wait.
Okay. Can you do it without a land trust? So meaning, can you buy real estate without a land trust?
Sure.
Yeah.
Yep.
Okay. Why did the renter give you, he must have not explained. Why would a renter give you $10,000 to $15,000 to move in?
Kenneth, that's a great question. We love rent to own.
Yes, if you are new here, that is definitely something let's chat about quickly.
Well, you know what? You just kind of brought this up yesterday, because if it wasn't for rent to own it, we were just totally renting, we wouldn't be able to have this lifestyle that we currently already have.
Yeah.
We have many of our renters who have been in these properties for a few years, and they buy them.
Mm-hmm.
And we get a large check up front for them moving in. It's called a non-refundable option deposit. Now, many of these properties that we've had people move in have gave us $10,000, $20,000, $30,000 to move in, and then just to rent it from us. And so we make monthly cash flow. And this is why we fell in love with this rent to own model, because we get big money up front, which helps us pay for that property. And most likely we get paid to buy real estate the way we do it that way.
Mm-hmm.
So we get paid to buy the house, most likely. We make monthly cash flow, but with our clients, they're different. They're not just renters. They're going to plan on owning the property. So they treat the property way nicer. They always want to pay on time because they want to fix whatever's broken from getting them a mortgage today. Here's the thing, guys. It's like 18% of the country could qualify for a mortgage. So that means our client list is about 80% of the country who can't qualify for a mortgage. Now, not all of them have 20 grand down, but a lot of them do. Sometimes they're self-employed. Sometimes their credit took a little bit of a bang because they just went through a divorce, or maybe they're in a hospital for a little while and got a big medical bill and it's on their credit report, like a collection. So there's all types of reasons why somebody would like this model. So we make monthly cash flow without management in place, because our renters take care of all the maintenance and repairs. And then if they do buy, we get a big old check. And guys, many times these checks are six figures or approaching that number if they do buy. So, I always had that theory. It's the Ferris wheel. You get money when you put them on, you're getting money every month while that thing's turning around. And when they get off, you get a big check too. So fill up the Ferris wheel as many times you can.
Filling it up. And I think that maybe we take it for granted because we've been doing it full time for a while now, but also we started this in 2017. We placed our first rent to own tenant buyer. And so it's second nature. And but if you have questions, like we absolutely love talking about it and answering them, because for me it was a little tricky. So Danielle's asking if the non-refundable option deposit goes towards the purchase price, that isn't really income for you, right?
So your account will count it as income. I agree with you. I agree with you completely because the property hasn't technically been sold yet, but is the way our accountant will most likely see it is that you've got that money, so it is income. So you have to remember that when the buyer does buy, they don't tax you on that twice because you've already been taxed on that once. But it is a non-refundable option deposit, which means you're allowed to spend that money right away. And I think that's why they count it as income right away.
Right. So let's say we get a $20,000 non-refundable option deposit. They hand the attorney that check and they hand over their first month's rent. All of that is our money. So we can put it right back into the business. We can take some out and pay for groceries, whatever you need to do with that money. It is yours to spend. Make sure you have a copy of it. So if and when that person does go to qualify for that mortgage, you have that readily available, because you will need to show that it was, brought to that first closing table, if you will, because essentially these people go to two closing tables, right? The first closing is they're moving in as a tenant buyer. They're going to get to rent to own this place until they can fix whatever's broken. Typically, it's their credit needs a little bit of repairing. And then that second closing table, now they're going to get to own this house. It comes out of our names and into theirs. And other than maybe popping a little champagne or something at closing, there's really no big fanfare because they've been living there, making it their beautiful home for the last few years. But that money is ours to spend and use, and you just want to have really great bookkeeping and show that when the time comes.
Yeah, so it's different than a security deposit where you're supposed to leave that in a special account, can't touch it, right? How that works. This is not that.
Yeah. And then you'll hear people do it all sorts of different ways. But we learned again, Ron LeGrand, he was on our podcast. Make sure you check him out. And the way he structures it, it just sets the buyer up for success. So that's why we do require more than maybe $2,000 or $3,000 down. We don't want a high turnover. I don't want to keep kicking people out of a house and putting new people in. Like, that is not our goal. Our goal is to turn these renters into buyers, and that is our track record, and that is our goal. And so when you have that business model, it's completely legal, it's completely ethical, and everything we do, like, there's such a warm and fuzzy feeling when they do own that house. And there's like a couple right now that are going through the process. So it's super exciting. And so the little nuances too, as far as the rent, another question Danielle's asking, the entire portion of the rent is just rent. And then if they have anything extra to pay over, it can be applied to their non-refundable option deposit. But a lot of times, it's just the rent, and we keep that rent just like market rent, everything else. We check out the area, make sure everything's in line, and keep it really simple, guys.
Yeah, so 2 questions. Is rent to own legal across the US? Yes, it is. In Texas, they have a 6-month limit to how long your option agreement could be for, just in the state of Texas. However, after that option agreement expires, doesn't mean you still can't leave the people in the house to rent it. Doesn't mean that you still can't sell it to them down the road. And doesn't mean that you still can't use some money that they gave you for that original down payment towards the purchase later on. Just means you can't have your option agreement beyond 6 months. So there's some things you got to be careful about in Texas, and just knowing how that works. But yes, it is definitely doable in all 50 states. And so are you raising, next question, are you raising the purchase price from what you bought it for in order to make money on the sale to the tenant buyer? Yes, we do. Right. So here's the neat thing about it. We're buying a property. I don't even know which one to think about. I guess we'll just do the one in New York. So we're buying it at 200,000. We're buying it where our payment's $1,350 a month. And at the $200,000 price that we got it for, if the interest rates were still record low, this thing would sell for $250 all day long. So our rent to own price is going to be $259. Not only is it $259, we're going to give somebody 2 years in order to qualify at that price. So they get that price locked in for 2 years the way we do it. So somebody buying that property from us in a rent to own are going to usually give us about 20,000 to move in. They have the right up to 2 years to buy it at that price. And after 2 years is up, we don't ever kick them out. We let them just renew it at a current rent rate and the current market value of the property. So values went up the last few years. So when we redid our new leases, we just rewrote them at current lease rates and what the current prices were. And on a handful of those properties, guys, it's a significant increase because obviously real estate's gone up quite a bit. So yes, that's how we do that. And how do we determine our eventual sale price for their option agreement? You got to remember, guys, the house, when they're ready to buy, still has to appraise.
Yeah.
So you can't charge them some astronomical fee that or price that just won't ever be obtainable, right? So I want to find out what the current market value is, see what that area has been appreciating like over the last few years, and I kind of price it adjust it to that. So if I see if I'm in a market, it goes up 5% over the last 2 years. I know the last few have been a little crazy, but historically, if they've gone up X amount, we price it that way. So if I'm going to give you a 2-year option agreement, I'm not pricing at today's price. I'm going to price it at tomorrow's price for sure.
Yep.
I think I got that one.
Yeah. Yeah. And I giggle because when we first got into this, he would name a price and I was like, oh my gosh, no way. And then he was even a little short. And then
yeah, there's a couple of times where I was saying, guys, price them high on purpose because you could always go down, but you can't go back up. And there's many times where we price them where, geez, I wish I priced them higher. So it was a lesson from us. Price them higher.
Yeah. And as far as screening your buyers, it's just like tenants as far as, marketing and everything, but we use screenthetenant.com. I always try to share, Paul Ritter and his wife do a great job. They're really big on credit repair. So it's a great program to coincide with a tenant buyer who might need that program in order to qualify for that mortgage down the road. But they run this nice long, 50-page packet for you. They pay for all of that. The tenant will. So you don't have to worry about that. But, you got to remember too is, credit isn't an issue. And I know a lot of times when you're renting, like that's the number one thing people are looking at. Honestly, like if they have a low credit score, but they have good debt to income and they've got the large non-refundable option and maybe they're self-employed or something happened, right? Like we understand life happens. So credit, we say credit, all credit accepted, bad credit, okay. No bank qualifying to move in because we don't need any of those credentials. We just need the other handful of things.
Because I will tell you what, I know many of you, when you're going to rent out your house or something to somebody, you're going to want to check their credit score. And if they don't have a minimum of 660 credit score or higher, you won't even rent it to them. Guys, credit score does not matter to me whatsoever. I was in the finance office in the car dealership world for 20 years, guys.
Whew.
I've seen tens, if not hundreds of thousands of credit reports over those times, because that was my job to get everybody approved. A credit score is really not, you could boost a credit score. I've seen many 700 people with 700 credit scores that you would not want to lend anything to. Why? Because they were living paycheck to paycheck, had very high debt, paid everything on time, and they were just one check away from having the whole thing crash down on them. And then I've seen some people who have a 560 credit score who maybe just had one or two small little things go on, but they have a super high income and really no debt. So for us, for rent to own, I'm not really tied to a credit score. Do they have enough income to pay for the property? Do they have overall low debt load? Can they buy the house, right? That's huge for us. And then we'll give you time to fix your credit. So credit is not a big thing for me. That will freak some people out, but I would rather lend to a 560 who is on the way up than a 700 who's on the way down. And I've seen that many times. And banks will think the same way because I've dealt with banks so many years and they look at it the same exact way.
Yeah. So this is a great question. If you follow Dave Ramsey, I'm sure he would like scream and yell. If they put a larger money down, do you ever pay down the original loan? And the answer for us is no. First of all, because we're buying these properties without our own credit and without having to go to the bank. So we want that loan to go as long as we possibly can. Ideally, we have 30 years.
Right. Well, and the other thing too is the rates are so low.
Yeah.
Versus what is my rate on return that I could get on that money? there's no way I'd ever put that into paying my principal down.
Nope.
Especially if I've got these 4 or 5, 2% interest rates, I will want to float that money as long as I can.
So once the 2 years expires and you renew them, do they lose their non-refundable option deposit?
Nope.
No, we're not. Absolutely not. Nope. Do you collect a new deposit? Nope. We just, it's all in the paperwork saying that that's still applying. Keep continuing to rent, pay your rent on time, and let us know when you're ready to buy. If it doesn't appraise, would you still, so if it doesn't appraise, would you just sell it at the appraised value? What happens if values went down?
So a couple things there. Great question.
Maddie.
So say you're in an area where properties do go down, you have a couple of options to just say, hey guys, we're gonna have to wait till they go back up. Right? Or you could always go down on your price. So what does that mean? Sometimes you didn't collect enough money down as a non-refundable option deposit too. Many times what I've seen, and just like anything else, guys, I'm not picking on anybody. There's right and wrong ways to do everything. But what I've seen a lot of people fail with rent to own is you have a $300,000 home and you collect $2,000 down, $3,000 down, and then expect your renter, your rent to own person, to come up with the other 25 in a year or 2 years to buy the property. Guys, if they don't have the money moving in, they're not going to have the money later on. The settlement's coming, the money's coming, the check's coming, this is coming, the lotto winnings are coming. Let me tell you, I've heard that 100,000 times. It ain't coming until it's here. Okay. So, and then when it does come, it's usually almost already spent so quickly. So for me, I don't really.
You have to have that large non-refundable option.
It's huge.
If the appraisal comes back super low, do you adjust your numbers?
Yeah, you could always go back down on the price if you needed to.
Yep. How do you overcome DTI on day one for seller under sub 2?
That's a great question, Rishi. So if you're going to do it with creative finance, the way to do it on day one is to buy it with a lease purchase versus buying with sub 2 or on a wrap in the very beginning. Because what's going to happen is your debt to income ratio could be off. So what does that mean, everybody? Because some people might not know that. Well, if the seller sells you their house with creative finance where the loan stays in the seller's name, that could mess up their debt to income ratio and mess up them being able to buy another property. So when you buy a house with creative finance, either on a wrap or sub 2, many lenders need to see that you've been making those payments on time for a year. 12 payments they need to see. Some lenders, it's less, depending on the lender. Everyone's going to be different. But a lot of times it's 12 months because they want to see that as income. So the question is, how do I get around that if they need to have that debt to income wash immediately and they can't wait that year? Well, that's where we offer to buy it with a lease purchase, because a lease agreement can wipe out that DTI right away. Immediately it can with the agreement. And then what that means is, with the way we write it up, is that I'm buying it with a lease purchase and I have the right to execute that purchase in, say, a year. And maybe 5 months into it, then I buy it with a sub 2, or I buy it with a wrap and then close on it. But in the beginning, to help wash out that DTI in the beginning, you're going to need to do it on a lease purchase.
Okay, I do want to clarify this question. Daniel saying, when the buyer buys, you keep the entire purchase price, they pay in cash and use it for more investments and let the original loan run the full 20 to 30 years, or do you have to pay off the seller financing when you sell? So good question.
Yeah, no, they're renting. They are just renting. They don't own it. They are renting until they're ready to buy it. So until then, it's just a traditional, typical rental. Small caveat is how you bought the property, right? That loan might be in somebody else's name. You're still the owner of it.
There's really no cash involved. So they'll go to the bank. The tenant buyer will go to the bank to be able to get their loan. And then that will then wipe our original way we bought it.
Correct. That'll pay off the underlying loan once our renter qualifies for a mortgage, and that's when everybody gets paid off.
So for easy numbers, let's say we bought it for $150, we sold it for $250, then we make that spread, and that the original seller's loan is wiped clean, and now our tenant buyer has their new mortgage and loan in place in their name.
Yep. They're the owner. That old mortgage paid off. Joe and Jen get a big high five.
Woohoo.
Made another renter a owner again. Got a little paycheck along the way. Everybody makes out.
Yes. And so it is really important. This question is, how do you handle a rent to own when the arm of an original mortgage runs out and the interest rate is exposed to the market increase? Well, you have to know how long of a term you had with your original seller. And that's, rule number one here. You got to know how long you have.
Yeah. So for an example, for me, if I have a fixed rate at a really low payment for a really long time, I'm going to want to do the set it and forget it and keep them in there as long as possible. But if I know I have some reason the rate is going to increase, or maybe my seller didn't give me a really long term, the renter that I put in is going to be somebody who I need to make sure they are not the set it and forget it type. Somebody who I know is going to qualify for a mortgage in a year, maybe 6 months, maybe a year and a half, something like that. So when I run the tenant report with screenatenant.com, I'm going to really look at what is the turnaround time to get the mortgage ready. And they kind of give you a snapshot on that. So if you run into somebody, they say it takes 4 years to get a mortgage ready, and you want to get cashed out in 8 months, that's not a good fit. Somebody that you find says, hey, I could have a mortgage ready in 6 months, that's your better fit there. So just be mindful of who you're installing in the property is the best.
Mm-hmm. And, I don't know the exact amount of time, Trace, but we are very particular. How long does it take sometimes to place a tenant buyer? It just depends on the area. Some are gone before we even close. Like we have one up in Rochester we keep talking about, but that was our home base. And so like we've got people just like
Lined up.
basically, lined up the door. And then others, if it's a little bit more of an expensive property or more rural, we really want that large non-refundable option deposit for so many reasons. Hopefully that's coming across here today, because it helps the seller. Obviously, they have more skin, or the buyer rather, helps us as the seller eventually. And really, it's just finding that right person for the right house. And it's not just throwing the first person that walks into your door or calls your phone. There is a lot of screening to do, and it's not difficult. Everything's super easy, but it is time consuming. And so it's definitely, as you build your business, a position, an actual person that can help you out, to be able to help screen those people. And it is different than screening tenants. You're not looking for a tenant. You are looking for a tenant buyer. Does the rent they pay lower their purchase price? No.
No, their purchase price stays in place. The rent is just rent. So we make the rent what is market value. So they're still renting, right? So we just charge them rent. None of that goes towards the purchase. If they pay over that, they'll go towards their non-refundable option deposit, but we don't give them any type of credit or anything like that. A lot of times what landlords do is property rents for $2,000, but they say, if you pay $2,500, we'll give you a $500 rent credit. Whatever.
Mm-mm.
If the rent is $2,000 for the property, we'll charge $2,000 rent for the property. And if somebody wants to pay over that, a little extra every month to get added to their non-refundable option deposit, we could do that. It still does not affect the price. It just goes towards the purchase when they're ready to buy.
And again, this is not something we just like watched on YouTube one day and decided to try it out. And I know we're here and you guys are enjoying us, but if this is something you're seriously considering, like get the proper education, sign up for the courses, the coaches, make sure you have the right mentor in place, because again, these are people's homes and you want to do the right thing and you want to sleep well at night. And our coach also said success is having a good night's sleep. And I truly believe that. So just make sure that you are doing all the proper things to help fellow humans out here. So I just wanted to remind people of that. And yes, screenthetenant.com. I cannot stress them enough. I'll drop another link in our big group chat. But they help us make sure that credit is repaired if need be. And then we also have an amazing loan officer up in the upstate New York area, but he can definitely point you in the right direction too, because sometimes banks get a little confused when you start talking rent to own. So you just have to find the right person. Again, we really took time to make sure we've surrounded ourselves with the right people.
Well, and that's the key too. Our mortgage guy is phenomenal. So when one of our renters is ready to buy, I just shoot him a message and say, hey, I want to connect you to our renter is ready to start buying. And then usually he collects some information, just like we just did one. And he said, okay, I'm waiting on the appraisal and we should be closing less than 30 days. It is the best. It is so easy when you have that person in your corner. So Joe is licensed. His name is Joe as well. So that's why he's awesome. He's licensed in New York and Florida right now, but he can assist in literally any state just about.
Yeah.
If you don't have one already. So guys, you are coming with the great questions today.
I know.
We sincerely appreciate y'all being here. I will say, this is what we love to do. We're very fortunate that we get to do this for a living and get to talk about it with you guys. My old job, I remember, and I just brought this up the other day. If some of you are listening that are from my old job, thanks for coming. But you'll remember at my old job, I wasn't allowed to talk about real estate.
No.
Nope. I could talk about fantasy football. I could talk about baseball. I could talk about the weather. I was not allowed to talk about real estate during my day job. So the fact that I'm here and we get to chat about this with you guys is why we love to do this. And this is what we do full time. We don't have our JOBs, which we used to have, where I was in the car business and Jenn was a teacher. We're doing something that we actually love to do. It's a lot of work, though. I will tell you, it's all easy, but it's work. And just like anything else, anything worth having is worth working for.
And systems and processes are really important. Having, just the right, everything laid out, knowing like Google Calendar. If you're not using Google Calendar yet, like guys, get on that stuff.
But this has been the stuff that's changed our lives. So the things that we're sharing with you guys are the things that we've learned from some of the best coaches that we've worked with all around the country.
Mm-hmm.
We've traveled. We're hosting a meetup tonight. So if anybody's in Florida and you're going to be in the Tampa, Sarasota area, we're hosting a live meetup tonight. Like we're bringing our kids to this. Like we constantly put in that time and effort and work in order to have this lifestyle and to share it with you guys of how you can do it, because real estate is great. It's about real estate, but it's about a lifestyle.
Mm-hmm.
And this is one of the things that people don't talk about is enough is what is your ideal lifestyle? Maybe you love your job and there's nothing wrong with that. But there's plenty of times where we have what's called those golden handcuffs where I feel stuck to my job. And when Jenn walked away from teaching and we were bringing in just one income, I felt like everything was on me. And if I didn't go to work, I wasn't going to get a paycheck. And how are we going to pay for all of our stuff?
Mm-hmm.
So, and Jenn came up with the idea years ago, we want to do this together. And we want to walk away from my job. She used to say, I'm bringing Joe home all the time. Well, 3.5 years ago, we've made that dream come true. And we've learned a lot. We've traveled a lot. We've got to meet a lot of great people. Hence why you're all here. That's why we love to share, because what our world looked like 4 years ago, I was at a day job doing normal day stuff. And now here we are living in Florida. Even we had to drop your truck off today to get the air conditioning fixed because it's all super hot down here in Florida. I'm thinking to myself on a Tuesday, there's no way I'd be able to go driving around right now. Yeah. I thought about that because my job I was grinding on today.
No, I'd maybe say hi to you and like, oh, my truck's in the shop, and then like, oh wait.
Yeah. So the fact I could walk into the dealership and be that guy now.
Yeah, it was so weird for you, wasn't it?
Great. Felt great. I'm like, here's the keys, guys. See you later.
And then he ran off to go look at the Corvettes.
Yeah, well, still got to look at those. But this is the key. This is the gift, guys. So thank you guys so much for coming. If any of you want to talk about how, you probably heard about our clients that we're working with. A few of you are in here, so thanks for coming today. I see you. But if any of you want to know more about how to do this, just reach out. I know my schedule has been booked because we went on Bigger Pockets and my calendar's booked till basically December. But if you get a hold of Jenn, she gets squeak in maybe a little earlier. But yeah, we have a few spots left I would consider for our small group coaching that we're going to probably have to cut that off soon, but it's exciting. And I love to get people these results. So, but you don't need it. That's why we shared on Bigger Pockets, and just hear how you get all these leads for free. But sometimes you want that extra hand holding through this process because it does get a little tricky. We're here to help too, guys. So reach out, send us a message. Make sure you're subscribing to the YouTube channel because we post a lot of stuff in there, and we're going to start posting some YouTube only content.
I want to forget our name tag for tonight. So yeah, if you're coming tonight, we'll see you. I saw a couple of you said you are, so looking forward to that. 6 to 9 p.m. Eastern down here in the Bradenton area.
It is going to be awesome tonight.
Otherwise, I don't know our next guest. It may just be us again next week, but we've got a couple people lined up coming soon. We've got exciting things in the works. So if we don't see you next Tuesday, then check us out. Again, the recordings are on YouTube, Creative Finance Playbook. The next meetup, I'm not sure yet. Definitely going to have to get on that. In California, we maybe go out to California.
We were talking about going to do some other events otherwise. So here's the deal, Bria, or anybody else, because someone reached out and said, hey, do you want to do one in Jacksonville?
Yeah.
If you want to set it up, we could have a good turnout. I would love to come out to California or any other of these cities. We love to travel.
Mhm.
We homeschool our kids, and our kids love to travel.
They love it.
And if you talk to them, they're 8 and 10, especially my 8-year-old son, he's like, I'm going to be with Creative Finance Playbook when I'm older, and Jenn buys, and he already does it now with Follow Up, and my daughter does too, especially because we have a couple of our properties that we have under contract right now. And I said, hey guys, we need help finding some buyers. I was like, would you like to make $1,000 or $2,000 if you bring in a buyer just by posting this on Facebook? And my daughter's head snapped. I thought she was going to break her neck. She looked at me so quick. She's like, I can make $1,000 or $2,000. I was like, yeah, honey, if you post this and we'll let you use daddy's Facebook account, if you post this and start asking some people a couple questions, we'll give you. And if you find a buyer, I will pay you $1,000 or $2,000. She is like, how do I sign up? There are these stuffed animal wolves I want, and there's all these things I want to do. So it's really, really cool that we could even do this with our kids.
Not as real wolves. So
she likes stuff. I mean,
no, I know, but she wants to go visit the habitat with the wolf. We're talking about that. So.
Well, there we go. Well, there's 500.
All righty. Oh yeah, it was like $400. Go sit with a wolf, which breaks me right out as a mother. So, all right, guys, we'll see you guys later, and keep going after your dreams.
Yes, and if you have any questions about, I see the question about mentoring, just shoot Jenn or myself.
Just shoot me a message
on Instagram or Facebook, and we'd love to help you guys out. All right, guys, you have a great Tuesday. Have an amazing week, and let's get rocking. There's people out there who need our help. All right, see you guys.